Ladies and gentlemen of the crypto space, we're live on a Friday, November 4th at 11:26 a.m. The market is bullish. The market is crashing. It's a narrative that everyone knows. They talk about it every day, and it drives much of our decision-making process. Is it bullish? Is it bearish? And I happened to tweet it maybe a couple of days ago at this point. I hate these phrases. Is it bullish? Bullish entails things are going up. Bearish entails things are going down. But directionality is never in one direction. It doesn't just go in one direction, and it'll drive you nuts. And when you see people asking other people, is it bullish or is it bearish? It's trying to get a sense of what to do. They're trying to make a decision. Do you buy or sell from a capital gains perspective? This type of investor methodology is not sustainable. It'll drive you nuts. Drive you nuts. It drove me nuts, which has led me to be how I am today and how I think about capital management today. Sure, from a technical perspective, you can buy and sell at opportune times when the market is bearish, when the market is bullish. You can catch the trends, ride the waves. You could be a surfer if you want to be a surfer. Better get good at TA. Now, obviously, there's times when TA is appropriate, and I think there's large asymmetric bets on the table. For me, I'm not a bottom chaser. I don't like trying to find bottoms. I like to find resistance and resistance being tested a couple of times, and then you catch a fat breakout. But these market conditions don't have that setup. There is no ascending triangles. There's no real fall. I mean, there's falling wedges, but that's the same thing. That's a directionality change. You get bearish and it breaks to the upside, and you get a trend reversal over time. And I don't like the bottoming patterns. I like the strong market trying to push through resistance breakout type patterns. And that's how you get some big multiples. That's how you do the capital gains. Um, during bearish market conditions, which we are in, this is bearish market conditions. Sure, you find bottoms, and I'm not going to never knock anyone, especially the relatively skilled TA persons that are able to reap meaningful capital gains with that kind of methodology. Sure, but there's a reason why I started everything I do. There is a reason why I do this stream because I don't like it. That's why the vast majority of the content we talk about is not that, which is hopefully not something you get from other social media personalities. Is it going up? Is it going down? Or whatever the hell the content is that these boys are putting out. It needs something more sustainable, and that's what we do. So what does it mean? The market is bullish or the market is bearish? Who gives a shit? It's about an asymmetric bet, the asymmetric bet to rule them all. Does humanity continue, or are we going to Mad Max hell? Are we going to have a post-apocalyptic scenario? Because if everything happens to the extreme of what bears can talk about, what I talk about on social media, what politicians talk about, and the whole calamity of the grandiosity of the bubble of the equities market, it would be a post-apocalyptic scenario. You wouldn't be able to pay the tax receipts. You'd have a sovereign debt crisis. You'd have the commodities go completely vertical, which is exactly what happened. But they came down from the European values for energy came down a bit. So obviously that's whipsawing. But it would be. Can you imagine 10x and it stays there? You're talking about humanitarian crisis and catastrophe. You're talking about Mad Max. So do you bet on that? Does it matter if you have money in a post-apocalyptic scenario? So I don't prefer to think about that directionality. I prefer to think that humanity persists, and this is something that Warren Buffett talks about. Humanity is going to persist. The financial systems around the world persist. They do what they need to do in order to maintain continuity, to maintain the functioning operation and order of human beings. That's what a financial system is. It coordinates labor, it organizes the civility, keeps people from cutting other people's hands off and stealing, breaking down doors and stuff. And that's the whole reason it must persist. It's the whole reason financials must be maintained, because otherwise you have anarchy. There's no way to control a population of 350 million people in the US or a billion plus people in China. You can't control a population if there's a financial system implosion and the value of a currency is worthless. We've seen it time and time again in emerging markets in Africa, so on and so forth, South America, where a currency becomes valueless. You literally get anarchy in the streets, violence and war, civil war, populism to an extreme. Albeit we got that anyway. Populism is everywhere. But that's what these markets create. That's what these financial conditions create. We're going to look over the technicals today because we have a very bullish day. Oh, did I say that damn word? Let's see who's in the stream. 21 people in the stream today. Looks like bullish conditions brought some people out. That's good to see. Joe's in the house. A pleasure. Tap C steady. That's my man. Paul, Dark and Gust. Dark and August. Jesse, stay safe, stay rational. That's what we try and do. Paul, have you studied game theory, and is it pertinent to understanding DeFi economic game theory? This is economics is game theory. Economics are incentive systems designed to incentivize behavior and control and manage labor. So this is all game theory. Gamification, which is the same thing in many regards. It's heading down the road of incentive systems where you're compensated for playing games. That's humanity is driven by incentive systems. You are not. People use the word salary. The only reason you go to work is because at the end of the day you are incentivized to be there. So incentive and salary are interchangeable. You need to broaden the scope of the words that are used to describe the shit that most people take for granted. I'm not paid a salary. I'm not paid dollars for working. I'm given an incentive to show up and participate in organized labor. How about that? And that's game theory. Um, I would like to eventually work in the space full time, but as a musician, logic and game theory have never been a strength. So, yeah, it would be contextually out of that realm. But look what you do with music. You're creating tones and harmony and melody to influence a person's emotions. So you're incentivizing behavior. You're giving people a positive reaction, which incentivizes them to listen to what you created. That's similar in that regard. Obviously, maybe this analogy is a bit of a stretch, but that's the type of perspective to have on everything, because everything reduces to incentives. Whatever content is created, there's an incentive to watch it because you're providing hopefully meaningful, educational, informative content. So it's always an incentive no matter what. No one does anything unless they're compensated. Person watches something because they're compensated with either enjoyment or information and education. Human beings are a very simple programming language, and if you reduce everything and anything to that base programming language, you'll be able to understand a topic of conversation or a system that is attempting to be understood. Hope that helps. Joe, investing to be free from monetary system off grid is true wealth. Yeah, we love these topics. And how do we invest is the question. And that's a topic of conversation that we've had for all these years at this point. And there's the adversarial approach where you're capitalizing on front running other people's behavior. You know, you see an opportunity and before other people deploy capital after you, so you deployed early, so when the other people deploy, you're able to sell and capture the capital that the other people put into the system. You know, it's the analogy of you put chips in the center of the table and then other people put chips in the center of the table, and then you're like, oh, since I put them in first, I could take out chips. So that's exactly what capital gains is. There's no other way to reduce it further. So you were first in, so you're the first to be able to gobble up a bunch of chips. Other people put the chips in, gobble, gobble, gobble. That's capital gains. So that's a perspective that is quite dispassionate and unfortunate. It's adversarial, but that's the reality of this trading that people talk about. That's the reality of what technical analysis gives you an edge at. It gives you a potential timing edge and a capacity to allocate capital prior to other persons deploying capital. That's the point of technical analysis. Um, Imagine not needing dollars to have a prosperous family. Well, you're gonna want to work, and you're gonna need dollars. So there's a whole story to be told there. Meaning, even if you had all the money in the world, you're gonna want to work because you have to contribute and participate. You need activity. It's about freedom of choice. You want to be able to, if you don't want to leave a job, you want to be able to leave a job. If you want to do a different job, you could take your time and find a different job. If you want to learn a trade, you can learn a trade. And what you realize is the reduction of that idea you're thinking, Joe, is freedom, freedom of choice. So freedom is a very powerful narrative. And then obviously physical freedom is a whole other level as compared to financial freedom, but financial freedom really reduces to a capacity to make choices. And that's why people get so frustrated over financial austerity is because they are being restricted with their capacity to make a choice of an activity or of something that is desired, or the physically tangible item consumption, so on and so forth. And when you can't make a choice, something is being taken from you. So it's a very emotional response to be financially impoverished. Dark in August, Noah, what do you think of the increasing OFAC compliant blocks on ETH? Um, well, I know that there's going to be a lot of blocks that are compliant and a lot that aren't. And I know that enough time that you'll get a block through if someone's doing something uh, that's not consistent with OFAC rules. They'll You'll be able to get a block through because there's validators that are not compliant. It just may take more time. Um, I don't have too much of a negative opinion over that controversy. I think it'll take some more time to fully understand how that's going to play out. But I don't have too much concern about it in any regard. Jaeger, look up the Doe Daddy song. Okay, not at the moment, but okay. Jesse, gotta go collect my incentives. Yeah, but oh, it's Friday, it's payday. Yes, it is. We could go over to the warden and we could get paid today, because it's payday. 22%, 23%. The warden has consumed almost all the attention of V curve incentives. Obviously, historically, we had them on what Andre created, bribe curve finance, and then Vodium picked up some attention. But right about now, all of it's on the Warden, and it's good to see. It's good to see, particularly liquidity there, because liquidity has their chicken bonds and they need to maintain yield on the LP to finance the chicken bonds. And in order to do that, they need to pay for votes. They need to rent votes. So I think there's going to be some great consistency of availability of incentives going towards VE curve votes. Base VE curve infrastructure level, not derivative at the convex level, albeit that's a historic conversation we've had, which is more meaningful, which has the best potential outperformance into the future. And I don't know. When I get into a thought conundrum like that, where it's like one or the other, I'm like, one, I don't need to outperform. I don't need to have the best possible pick, and that alleviates some of the frustration. And two, I know that whatever that occurs in a derivative is going to eventually uh, carry benefit back to the base layer infrastructure. So that is a good part of my rationale for focusing on base layer infrastructure as compared to a derivative of the system. In this particular instance, a federation participant. Peas in the house, a pleasure. I hope all is well. We do the best we can. Paul, will Solidly and Phantom have anything to do with Solidly Mainnet? No, Solidly and Phantom is dead. I missed the burn, wondering if my Lock V NFT, it's worthless. I'm sorry, friend. Mainnet will be obviously a new token issuance. It's a reboot, but you know when Andre left, he paid the folks that were contributing meaningfully to Solidly, I don't know, it was like 50, 60, 70 million dollars. So he basically paid them to continue efforts. Now, obviously, Velodrome launched on Optimism, but that was, to my understanding, some patchwork, meaningful patchwork on the original code base. I'm inclined to think, and I think I've heard that the Solidly relaunch is a significant rework of the base implementation. Not the intentions or the structure, because obviously the goal of the protocol is what Andre originally wrote about in his Medium articles that was so extraordinary from an innovation and an iterative standpoint. So the functionality, the expected functionality should be hopefully what we all hoped Solidly and Phantom would have been if things weren't fucked up in the code implementation that manifested completely malfunctioning tokenomics. Now, I have a high opinion of what's launching on mainnet. Um, I have a bit of a bias situation because I did get the burn, and that means it's a free position because I completely wrote off that position on Phantom. I considered it a complete loss. So the fact that I get my position for free on mainnet is great. It's just, it is what it is. It's there. I have no intention of adding to the position. I have no intention of liquidating the position. I have all intention to just retain whatever's given to me in either a VENFT or a 0x DAO, whatever position, and whatever the protocol does, it's going to do. So I look forward to seeing what plays out in that regard. I'm still in generally a bearish mode. The sentiment is that the system is fractured at a macro level, so I will not be expending capital unnecessarily. Need cash, need to service debt obligations, got to pay to live, so on and so forth. So base mode of operation is still yield and income, so on and so forth, until we really get opportunities for growth and outperformance with some really cool TA and some technical setups. I wouldn't be deploying the moderate amount of cash that I have. I'd rather have the cash. If we have that significant deflationary impulse, then you could really potentially scoop up assets on the cheap. That could drive some meaningful part of weekly revenue. Um, Jaeger, the music, yeah, yes. It's cool though, and it's important to get out of your comfort zone. So, but what's most important, Jaeger, is to see the relationship between things and create analogies. Something is like something else. My entire uh, presentation to you guys over the last couple of years is me just seeing the relationship between what has occurred in DeFi to traditional finance and seeing the commonality, the shared behavior, the shared attributes. Probably the only person to describe the crypto space as an emerging market. Obviously, I'm the first person to call it a federation or the phenomena of a federation that has occurred in the crypto space. So all of that is really just me seeing the analogy. It's like this, it's like that. That's the deal. So you could easily find an analogy to translate financials into music. I mean, I gave a brief example of it earlier when I was talking on the topic. Zoidberg's in the house, a pleasure. JJ, I'm okay. Everything's good. It's a Friday. And we got a little uh, bump and a pump on a Friday. So it's a good Friday. Zeno, they're supposed to be working dilution protect. Well, that's the whole thing. The tokenomics were screwed on launch on Phantom. So, and for very specific reasons, which I pointed out in tweets that I've written. Um, so if the dilution protection is there, I'm very happy to be exposed to the position with dilution protection, and then the position will do what it's going to do. So I hope folks have maybe a position that was burned on Phantom, and it carries over. You still need to be cautious if you're deploying free capital in a market like this. I have zero trust in the market still. Look, we just hit the TWAP on the weekly for curve. If we go over to the dollar, watch, it's probably on the TWAP. Yep. Nope, it's still below the TWAP, but it's above the 10 SMA and the 50 SMA on the daily. If we go out to the weekly, heck of an inverted hammer, and that's a moderate downtrend. Obviously, it's only 2 weeks, so that's not too significant. Um, but there's reasons for this to run back up. It could close on the daily above the TWAP. Where's it? Well, we're significantly above the TWAP on the weekly, so this is very much still an uptrend. On the daily, we have a bit of a double top, a W top, so there's indication that there's potentially a trend reversal, but you would need a significant breach to the downside. You need to break to a new lower low to have at least one confirmation of a potential downtrend, but then you got the 100 SMA just below. Wick down to the 100 SMA and then back up, and you close at 109. You have not really much confluence suggesting downward continuation. This chart really speaks to everything that's going on in the financial system, including our crypto financial system. Until we have a meaningful depreciation of the dollar versus other currencies, you're not going to have capital flow from the dollar into emerging markets. And that includes our most favorite emerging market, the crypto space. Liquidity in the system is still drained significantly. We saw it bump up a little bit over the last couple of days, from end of October, last week of October, but it's stalled, and this is not an optimistic chart, and there's no reason to think technicals are applicable to this chart. But obviously, liquidity has significantly drained from the top. QT is still in full effect, as you can see in bond market yields. The fact that we're at 4.156% is wild. It's destroying the value saved of the older generations that were traditionally deployed to 60/40 portfolios. And it is what it is. This is a conundrum no matter how you look at it. Listen, if they reversed rates and made liquidity available to the market, maybe they drained the reverse repos. Uh, they could do that in a variety of ways. And then you have significant equities melt up, lead lag report style. Then you can have significant concentration of wealth where the participants in the equity markets, come on, retail is predominantly out of the market. Come on, everyone's afraid. Who's left in the crypto space? But then you have a big melt up, so it's a significant concentration of wealth that creates a lot of animosity when the few get a significant amount of capital. And that's why Stan Druckenmiller has said uh, that being able to navigate the markets creates the massive wealth concentration. And really, so what would I argue is how do you navigate the markets? It's remain in the market. So how do you survive? And that's risk management. And that's having enough capital, having enough cash to survive over a period of time to pay your bills, so on and so forth. And you need obviously more money than just to pay your bills because you got to allocate capital at opportune times. So that's not an easy process. That's the process to master. And then when you have a period of significant outperformance, it's basically free money time. And we're not going to have that anytime soon. But there's a time when technicals just line up and you got ascending triangle after ascending triangle after ascending triangle. And it's just nonstop. And you get breakouts left and right over and over again. We're not in free money time. This is a time to be maximally risk considerate, maximally protective, and expect the worst. And because I constantly reiterate to maintain a structured portfolio, if it's not the worst that occurs, you're going to have appreciation. The portfolio is going to grow in value. And that's exactly what we have today. This is why you don't exit the market. Not exiting the market entirely and structuring accordingly with intention to survive is how you have an asymmetric bet on the table that the financial system and humanity continues to exist into the future. And the powers that be that control these tools and these systems do what they need to do to maintain continuity. They're just not going to turn off the system. No, nobody wants that. Nobody wants a calamity. No one wants anarchy. No one wants Mad Max. Well, I guess some people do. The anarchists. Um, DLNRDN. It's probably not a name. It's like an acronym. Did you have time to look into check out the Zen project with its proof of adoption concept? Zero interest whatsoever. Zero interest. Protocol we haven't touched in a while is Abracadabra. Any thoughts on its future? Well, conceptually, literally nothing has changed, in my opinion, on the potential for Abracadabra. The complexity is that you need collateral and you need a low volatility environment. It's like when the VIX or the VVIX is low, and when it's low, the algorithms say to buy, and that's when markets tend to buy because there's low volatility risk. You're going to buy, and it's going to be about the same price. And the market is calm. It's like an open sea with the sea being steady. Um, so in this type of environment with this potential significant volatility, you don't get a lot of leverage, especially when the collateral is highly volatile. So the potential and the significance in the protocol from a functional standpoint is paramount. It's a CDP. It's like QDAO. It's like MakerDAO. It's like a Eurodollar. No, it's not like a Eurodollar. It is a Eurodollar. So it's a significant creation that those boys made, and nothing has changed with its potential, what it could be in the years to come. Uh, I don't have a position, and I'm not interested in that kind of exposure to volatility, but that's separate and apart from uh, understanding what it is and what it could potentially be. Jaeger, EM denominated in and USD. Though, I mean, that's what the crypto space is. It's captured dollars. We've seen that over and over again. The crypto space has captured $146.12 billion, either dollar backed or a CDP, a euro dollar, such as Tether, which are euro dollars. BUSD is dollar backed, USDC is dollar backed, DAI are euro dollars, Frax are euro dollars, PAX, I believe, are dollar backed. Gemini dollar backed, MIM obviously is euro dollars, Liquidity is euro dollars, Alchemix is euro dollars, SUSD is synthetic. No, it's a euro dollar because it's collateralized by synthetics. So that's it's a euro dollar. I mean, look, come on, all over the place. Look at the amount of capital. Extraordinary. I wish this chart was a little bit more robust and I could look back to, the middle, the end of 2019. But it's just a massive amount of capital expansion and retention of sticky capital. That's by definition an emerging market because there's reasons for the capital to stay. Clearly, everything's draining. You have a deflationary dollar. It's catastrophic disinflation of global currency. So that means currencies being chased everywhere, especially to service debt and to prevent liquidations, the big liquidations at the macro level. That's why you get the great volatility in this relatively small market. Because when you need $50 billion out of a relatively small market, it moves the market significantly. Whew, that's the deal. Manny Captain, what's your favorite passive income play, excluding VE Curve? I was tempted for a VE bow position. Now, obviously, Aura is significantly more productive, um, but it's hard to say that I. It's hard to say. One of the reasons why I like the VE bow is because it's base layer infrastructure, much like the VE CRV, but it's not that productive. Albeit the Warden has a hint of productive capacity, because if we go over to balancer, these are VE bow yields, which is 40%. So 30 something percent if it loads. So that's quite meaningful. Um, I don't know if I have, I, I don't know, I don't have the capital to create the position size I want. And, I appreciate Paladin because this is obviously their product, the Warden, but it'd be nice to see more sustainability with regard to offers. So I don't want to deploy capital without having a bit, especially to a locked position, without having a capacity to know that it will be productive into the future. So we don't have that particular sense with Curve because, especially with liquidity, that has a high likelihood to be productive into the future because of what they need to do as a stablecoin to finance their bond depth or even just finance the bonds. That's how you pay the bonds with the yield that the LP positions generate. So VBAL is interesting. I'm interested going into what's being built during the bear. There's the two protocols that interest me is solidly getting deployed, which is a freebie position, and Tapioca DAO, which is not released probably into January is when I've heard it's going to go live. So that's of interest. The, Everything we see in the documentation for Tapioca is quite interesting to say the least. And solidly could potentially become what it was supposed to be on launch that was fucked up so horribly. So that's about it. Obviously, Frax is a wonderful consideration. It's not so productive at the VEFXS level. You know, FXS ETH is very interesting. Not that it could be extremely productive, but if you could get 6, 7, 8% on spot Ethereum exposure, that's quite interesting. Given we have any period of significant network volume, we're going to have basically a deflationary currency. Now, is it imperative that it's deflationary? No, because it's completely collapsed with disinflation. There's literally no expansion, and until we have whatever the next release is for Ethereum, you can't even withdraw. So there's literally no increase in supply. It's quite an extraordinary monetary policy achievement, to say the least. So I like the base layer. If the system is going to expand the degree which we think it's going to expand, you don't need to be exposed to the highly volatile derivatives and high level implementations. If the capital that I think is going to run through the systems, I mean, just come on, you get in 5% on well, 5% is 5%, no matter how much capital is flowing through. But you could have, imagine $100 billion a day going through Curve. I don't think it's going to be 5%, which means the position is going to dilute as people purchase the Curve from the market to gain exposure to 50, 60, 70, 80% yield, 100% yield on base VE Curve, which drives up the price of Curve. So there's a variety of interesting things that could play out, and we'll see. Which means I need to be in the market. I need to be here to see what's going to happen. I need exposure to this stuff. What else is interesting from an ownership perspective? You know, own Apple stock like every other dumb fuck out there? No, you got to be different. Got to be different. Jack's anarchy isn't Mad Max or chaos. That's what government want people to think. And Archon means no rulers. Yeah, what I mean is basically a situation of incivility where you have lawlessness and violence and lack of resources and famine, which means people are going to fight hand over fist and kill their neighbor for dinner that they haven't had in 3 weeks. So I mean, that's not really a fun bet. That's kind of, you want to own things because if you have that scenario, it doesn't freaking matter what you own unless it's pasta and pork chops. Dark in August, Tether got rid of commercial paper. Well, it's still a CDP because of the treasuries, which is cool. So, but it's more favorable in the eyes of government that it's treasury, it's not commercial paper. I've never had a negative opinion of Tether. So obviously it's questionable from ethics and fraud standpoint, but from a conceptual standpoint, what they've always done is like, oh, okay, it's a goddamn euro dollar. They're taking collateral assets, whatever the hell it may be, boats, homes, treasuries, commercial paper, and they're issuing a debt against it. They're creating a liability, which is exactly what banks do when they give you a loan. The liability is the currency unit, and in this instance, the liability is both portable and fungible in the form of a tether asset. So that's quite fascinating because bank account liabilities, when you have a deposit, it's neither portable nor fungible. It's literally just a balance sheet entry on the bank's books. So you literally have to withdraw it in a paper dollar form. So it's very different concept what a stablecoin is as in consideration of traditional accounting practice. Um, what you're talking about, Noah, is Fallout. Yeah, yeah, that's it's very dark to head down that road of thought. Manny, have you looked at Resonate Finance? There's a yield futures protocol. Curious to hear your thoughts. Futures, derivatives, speculation, betting, options. Pari-mutuals are quite interesting. So Hero Fine HXRO is cool. I like what they're doing over there. You guys know about that position. Um, so I saw Resonate. It's cool, and there's so many cool things. I don't chase so many cool things. I stick to the core portfolio, and I try and get a good price, maybe a seed round, um, and that's about it. And then the system will just carry into the future. So I like the what Solidly is doing coming to mainnet. They're building the federation that they did on Phantom. So that could very well be a very meaningful thing. And I hope some of that capital reinflates because that was a big loss of capital over on Phantom. Um, High opinion of Tapioca, so we'll see how that plays out. And I don't need the chase stuff. I know I got friends and folks that are talking about Frax. I'm like, all right, I've had a Frax position since it basically launched. So that's the type of thing that I'm very happy to have had uh, all this time. Gazika's in the house, a pleasure. Do you invest your current projects, new ones, at these prices, or do you keep waiting for a discount? I have a structured portfolio, and the portfolio is productive, so I have the capital I need to service my own debts, car loans, so on and so forth, and pay my bills, and so on and so forth. And I have excess capital that I could allocate if I want to into the markets, but I'm very prudent. I am the very restrained capital allocator, and especially in this situation. So yeah, if there's a screaming opportunity, like we have a big systemic collapse and Ethereum's $800, sure, I'm going to buy a shit ton of Ethereum. But this is not a time where I'd be buying right now. This is a time where I'm trying to restrain from buying. I'm thinking about cash. I'm not I'm not enticed by these prices given the macroeconomic situation. So I'm not enticed to buy, and I'm also quite content that I have the structured portfolio. You don't leave the market. So I'm very happy that it is a bullish day because I have the structured portfolio, and that's cool. That's good. And I'm happy that I have enough capital in case shit hits the fan, and I'm prepared for both. So the whole point of today's stream was the market is bullish, the market is crashing. The whole point is who gives a shit? You need a methodology and a strategy that services both narratives playing out simultaneously. You need to be risk considerate, and the portfolio needs to be able to handle both directions. That's how you survive. Um, just announce Liquidity as a Solidly partner. Listen, Solidly is building a federation pre-launch. That's what they did on Phantom. That's what Aura and Balancer has done post launch. That's what Curve has done. It took time, and those were organic constructs. What Solidly is doing is an inorganic federated organization. They're proactively engaging, creating an organization. Uh, that's a big deal. So I even though the solidly launch on Phantom was a catastrophe, that is irrelevant with regard to what it was trying to do. The Federation was there. The tokenomics was there conceptually. The strategy, the monetary policy, the game theory was all there. Just because it launched and fucked it up doesn't mean anything with regard to what it wanted to do. So the whole point is, if it gets it right, if they spent the last 6 months getting it right, and they're building this federation on launch, I'm very excited. I was very excited about the original launch. I'm very excited about the new launch, and I'm very happy to have a freebie position that I completely wrote off. No, it is not public, and just be very considerate because we know what happens with these types of projects, Joe. They could potentially completely blow up if they get the tokenomics wrong, and that's exactly what happened on Phantom. We'll see what happens when they launch. I hope it goes somewhere, and if it doesn't, expect the money to go to zero. If you expect a capital investment to go to zero and it doesn't go to zero, it's kind of a win-win. You expect it to go to zero, you're like, all right, shit, it went to zero. I expected it to go to zero. If it doesn't go to zero, you're like, oh, that's nice, it didn't go to zero. You see, it's a win-win if you expect the worst possible outcome and it doesn't happen. Thoughts on Polygon? Polygon is the India narrative. That's still the same narrative. A lot of my narratives are not going to change. It's a big deal. You know, there's two networks that I would say are best suited for corporate because they probably are in a position to provide corporate support, and that's Solana and Polygon. I don't know what Avalanche is going to do in that regard. I don't have a sense of that, but that's where I think the corporate infrastructure support packages would probably come from. Solana being FTX and just Matic, Polygon being huge because of what Matic did. Um, that's my opinion. I think I think Polygon's a big deal. I think there is 1 billion people in India that are hungry. I mean, hungry physically, but also hungry for opportunity to build, to create, to program, to really create beautiful things. And there's a very strong narrative behind what could come from such a large population. You know, come on, the boys that created Polygon, the Indian boys are role models, and they could spark an entire movement of builders and creators in a decentralized network that executes code. The potential there is extraordinary. George is in the house, a pleasure. Dark in August. George, do you have any interest in ENS domains whatsoever? Not really. You know, there was a fortune to be made back in the early days of the web when you get domain names, like one-word domain names, and there was squatters. And that's exactly what happened with the ENS run. So I just don't do it. But that doesn't mean it's not potentially big. Now, obviously, the big names are already taken. Most of the one words are probably all taken. Sure, all the very simple letters and one letter, two letter, three letter, it's all gone. Um, so I understand and appreciate what it is. It's just not something that I currently engage in, is what it is. Let's see what else I could look at real quick, and we're going to wrap it up for today. We went over liquidity. Is this Frax? No, I was looking at synthetics actually. Synthetics is still a big deal. I mean, it's the infrastructure of optimism. It's basically what GMX is becoming for Arbitrum. It's the infrastructure. The commonality between the potential uh, path for GMX versus synthetics is quite interesting. Um, quite interesting. We'll leave it at that. So let's look at, I want to look at Frax for a second. Frax is back up to 692. Good to see. Dip down to like 650, upper 640s. This is a massive inverse head and shoulders. So this is good to see. Yeah, I was tempted for a bit, and I was playing an LP position. What was a CVX, FXS, Frax baseball on convex Frax, that is. And it's cash. I told everyone that was a cash position, and maybe I'd exit it, and I did. And I took out USDC. I think I broke even with the yield. I don't want exposure. That's the problem with me. If I could sell something, I'm going to sell it. And that's why I appreciate locked positions so much, because a locked position is not a position. It's a purchase. You own it. You can't sell it. Something you bought. So you either see something or you don't. If you see something that's meaningful, you have conviction, and you pull the trigger for a purchase, you have it in perpetuity. And what will be into the future. I will be here in 4 years to see what happens with Curve. I don't have an opportunity to sell it. I have all the incentive in the world to not let the voting power decay to zero. That would be completely irrational. I'd be giving up a significant amount of income on a weekly basis. No. So I will be here. I guaranteed to be here. So that's why the purchase was made. That's the deal. Crypto Bets is in the house. Never late because there's the rewind button. Any allocation to privacy narrative? Fedora, Monero? No, not at all. Not really. Crypto Bets, Breitling hat. I thought you were a Rolex kind of guy. I like the Breitlings. Um, there's something about the chronometers. I mean, the two brands from Switzerland that are certified chronometers are Breitling and Rolex. So you got all the brands over there. But what you could get a Daytona from Rolex for a chronometer, but I'm not going to spend that kind of capital in this catastrophic macro environment. So Breitlings are absolutely stunning, and they're a fraction of the price of Rolex, and they're just they're beautiful. And it's not some people get these things as investments, but you get the volatility in that particular market. The prices go up, the prices go down. If I got to purchase something, I'm going to purchase it because I want it, not to resell it. So in that regard, I don't give a shit if the price goes up or down. I don't care if there's a resale market. And Breitling makes beautiful products. Good observation though on the Breitling hat. Um, Kingmaker, I know your money management, but I just wanted to ask you what will Aptos? Aptos is useless. I have zero interest in it whatsoever. Metis, on the other hand, is interesting. Metis has IPFS built in, so that is quite interesting. Whether it picks up or not is another story, but Aptos is useless. That doesn't mean anything to me. It's not even degen. It's just people that just waste capital on like just bullshit. That there's no vision, just degeneracy and complete absence of financial aptitude. It's like hacks. I mean, come on. It's just pure hopium. Anyway, maybe I'm too harsh on that protocol. You are earning yield on Curve. Yeah, Curve pays. Curve pays. Let's go over to the old UI because that shows what it pays. Curve pays 1.42%. Not going to complain. It's not as good as 4 or 5% on like 2-year treasuries, but that's meaningful from cash flow if you consider the potential asymmetric appreciation, and Curve pays on the Warden. So there's room in DOLA, 48% room left, and that's paying 23% of the money. So that's a nice return. 23% is nothing to sneeze at. LUSD still cranking out 27%, but there's no room in the PAL Quest. MIM's got nothing. It's paying 5.12. I don't even know what they're doing. Rewards and Frax. Albeit it's a stablecoin. That's interesting. That's not FXS. That's Frax, the stablecoin. But what's with the 5%? So I don't know what's going on there. But there's 48% available in DOLA, which is interesting. Let's take a look and see how many via curve. There's a lot. There's a lot of room left. There's over 1.7 million VECRV votes that could vote for this quest and still receive a 25%, 23.24% APR on the money, which is pretty cool. No faith in Move programming language. Seems like good tech at its core. Yeah, but it's irrelevant. What's pertinent is liquidity, and liquidity is dollars and stablecoins. and everything else is irrelevant unless there's pairs on AMMs, unless there's bridges to move capital back and forth. So what's pertinent is this page. And filter by, can we filter by network? I wish we could filter by network. That'd be, oh yeah, you can. So filter by network and see where the liquidity is, and that is all that matters. Where is the cash? Because that is what the game is. The game is always about making money, and the money is dollars, and those dollars are stable coins in the crypto space because the stable coins could go to a Juno card, could go to a BitPay card, and can actually pay for shit. So the network with the most cash means it has the most potential or the least restrictive liquidity environment, which means it's still a negative sum game at this point. But look, it's not much of a negative sum game, only 0.01%. Obviously, if there's zero reduction in liquidity, it's a zero sum game. I mean, everyone is chasing the same amount of capital. You want to see growth in liquidity, in which case it's a positive sum game, and that means there's actual potential for outperformance. But it's all about liquidity. That's why we talk about macro. That's why we try and understand the traditional financial system, and that's why we call the crypto space an emerging market, because it has captured liquidity that we fight over with the volatility of assets. Friday, November 4th, 12:17 p.m. I thank you all for joining me. Tell everyone to subscribe. If folks don't listen, I can't help them, and we could help one person at a time if we just tell them there's a way to do it better, because we all can do better. You know the deal. After party on Discord for the most rational community in the entire crypto space. And I wish you all a wonderful weekend. I wish this number goes up a bit further or starts going up significantly further. So cheers to liquidity. I'll see you on the flip side on a Monday. Peace.